Hi everyone, very good morning and welcome back to Grade B. Chaliye. So in yesterday's class we talked about the basics of derivatives. I told you the 4 products of derivatives, right? The 4 types of derivatives that we'll be dealing in. Very good morning. So in relation to that, we are going to see the various other things. I told you that from tomorrow onwards, we will be starting with the notes. ठीक है? So अभी हम notes के साथ में start करेंगे. See, the first few pages I have explained you every bit of it. Okay, there will be few things that will come up and I will explain it to you. But if we see on the major part, everything I have already explained you. So now what we have to do is just we have to read it out. ठीक है कि क्या है? Actually we have to see the formal definitions. We have to see a few parts of history. Then we also have to see, I told you yesterday itself that what are the 2 purposes for which the derivatives products are in the market, and we talked about that there is speculators, then there are hedgers. We have talked about all of it, right? So we will be just talking about them again, but in a formal sense with the addition of few more things. ठीक, चलिए let's start. So what is a derivative? Derivative is a product. I told you it is a financial contract. You can just understand it is a financial contract whose value is derived from the, इसकी वैल्यू कहाँ से आएगी? The value of this particular product will come from any another asset, and that asset we call it as an underlying asset, index और reference rate. ठीक है, कुछ भी हो सकता है. See, derivative के लिए when you need an asset, that asset could be anything, right? It could, we will see that what kind of assets can we talk about. See, your any kind of commodity could be your asset, any kind of shares could be your asset, any kind of financial measure could be your asset, right? So in a contractual manner, the underlying asset could be equity, forex, commodity or any other asset. Example has been provided over here. So for example, wheat farmers may wish to sell their harvest at a future date to eliminate the risk of change in prices for that day. Such a transaction is an example of the derivative. The price is derived by the spot price of wheat, which is the underlying. Acha, there will be 2 usage of words called as spot price. So abhi to it would be clear to you by the name itself, right? Spot price means the day at which you are making the transaction. Aaj kya value hai? So whenever you are watching today's value, that is going to be counted as spot price. When you are watching the value after 3 months, that is a futures price, right? उसको क्या बोलेंगे? Futures price. So this is the difference between the spot price and futures price. And why do we enter into derivative contract? Because we fear that there might be risk between the spot price and the derivatives price. हमें डर लगता है, being any party to the contract, we are fearful that in future the prices can reduce or prices can increase. ठीक है, अब देखो what kind of assets are there on to which you can make a derivative contract. ठीक है, कौन कौन कितनी टाइप की asset हो सकती हैं? So it could be equity shares, equity indices, debt market securities, interest rates, foreign exchange, commodities. All these, they can be the asset and on to which the derivative contracts can be made. ठीक है, now see equity shares. When we talk about equity shares, right, this we are talking about an individual security. When I am talking about the indices, how indices are made. So if you have studied about the BSE Sensex or if you have studied about Nifty, how they have been made, they are the basket. ठीक है, They are the basket of securities taken from every other company, and on the basis of that an index has been developed, or let me call it as a base average price has been developed. That is we call it that is what we call it as an index, right? On a very simple term. So equity share means you are talking about just one share. Equity indices means you are talking about a basket of equity shares which are together calculated and then an average has been found out. ठीक है, so आप एक अकेले equity share को भी अपना asset ले सकते हो. You can take the equity indices also as your assets. Now let's move to the products, participants and the functions. Number one, derivative contracts have several variants. We all know about it. The most common variants are what? Forwards, फ्यूचर्स, ऑप्शंस एंड स्वैप्स. ठीक है, ये तो क्या हो गए, ये आपके हो गए, दिस इज योर प्रोडक्ट टाइप्स. These are your product types: forwards, futures, options and swaps. This we have studied yesterday. Now the following three broad categories of participants, just wait for a second. Yes. So the most common variants we have seen. Now we are talking about the participants, right? इसके बाद who all are the participants? So participants can be hedgers, speculators and the arbitrageurs, right? What all are these? These are the three types of participants that we have. They are trading in the derivatives market. Now we will be talking about one by one for each of them. Number one, we have the hedgers. So hedgers are the people, you can understand, they are actually having the asset. ठीक है, इनके पास asset है and they are really facing the risk. इनको risk भी है. So what they actually want to do is they want to reduce their risk. ठीक है, उनका intention क्या है? Here we'll be talking about intention. So what is their intention? Intention is to reduce the risk, right? Whereas when we talk about speculators, speculators has the intention to earn profit. Asset वसेट कुछ नहीं है उनके पास में, they just want to make a profit, right? That is why they are entering into the derivatives market. Let's understand. So hedgers, they are facing risk associated with price of an asset. ठीक है, suppose wheat farmer will be called as an hedger, right? Why? Because he is having an asset and he is facing the risk for it. They use futures or options market to reduce or eliminate this particular risk. What kind of markets they are going to use? Futures or forwards. Hedging is a position taken in futures for the purpose of reducing the exposure to one or more type of risk. ठीक है? Hedging means what? Its meaning is the reducing or controlling risk. This is done by taking a position in the futures market that is opposite to the one in the physical or cash market, right? Now see, in the cash market, you are assuming that the prices of wheat might get reduced, okay? Actually in the physical market. So what is the position that you are going to take? You will take the position, you will say that I want to sell my wheat at a higher price. So you will take a what you can say opposite position in the derivative. That means if in the current market prices are down, okay, currently the prices of wheat are down, then you will take the derivative contract in which prices of wheat are high, okay, जहाँ पे wheat की prices high है. Now hedging is a Hedging is a two-step process. a gain or loss in the spot position due to changes in price levels. It will be countered by changes in the values of futures position. So this is what we have all understood, right? We have talked about the position of the wheat farmers, how he can purchase and sell through the futures contract. Next, let's talk about the speculators. So who all are the speculators? Speculators, I have told you, they use the derivatives to bet on the future direction of the markets, right? They bet on the future directions of the market. Why? Because they want to make the gain. ठीक है, इनको gain चाहिए. Fine. They are just interested in profits. They do not have an asset sort of thing. They just want to obtain the gain. There are three types of speculators based on the duration. One is the called as scalpers. Scalpers, they just hold the derivative contract for a very short time, like just for the minutes. Next we have the day traders. Day traders, they just enter into the derivative market, or they take a derivative product just for one day. And then you have the पोजीशन ट्रेडर्स. पोजीशन ट्रेडर्स मतलब ये लंबे टाइम के लिए लेते हैं. So this is what you have to remember when we are talking about the your speculators, right? Just look at it. Now read this particular definition just for once. See, this particular definition is really very important. What we are going to talk about here is, we talked about speculators, we also talked about the hedgers, right? But now we need to talk about the arbitrageurs. Arbitrageurs, what they do is, they take different positions in different markets. So for example, let's take crude oil. ठीक है, crude oil is a crucial commodity for us, right? So there is a trader, or you can say there is a person who is arbitrageur. What he is going to do, he will enter into a contract in Indian market, as well as he will enter into a contract, let's say, in the UAE's market as well. ठीक है, वहाँ पे भी he will enter into a contract. So he is taking different positions into both the markets. यहाँ पे he will be taking the position to sell, and in the other market he will taking the position to buy. So this is how, by taking the different positions, he is earning profit for himself. ठीक है, so this is the kind of role that these people, arbitrageurs, they play. Now they are in the business to take the advantage of discrepancy between prices into two different markets. We all, even if you see in the local level also, when you go to buy vegetables, there might be a little bit difference, not that very much of a difference, but a little bit difference between the prices of two markets, right? It can happen. So that may happen in the international scenario as well. So that is why they take the different positions into two different markets. और दो market के बीच में जो price differential होता है, whatever price differential is there between two markets, they take the advantage of it and they make profit out of it. ठीक है? So this is the three kinds of participants that we have seen. Now let's see the type of derivatives. Actually, this is type of derivatives based on liquidity. ठीक है? We have seen the types of derivatives, that means the product based derivatives, but now let's see the type of derivatives based on liquidity. Okay, number one, we have exchange traded, then we have the over the counter derivatives. Exchange traded, I have told you, see, exchange or stock exchanges that we know about them, they are a position of meeting place for the buyers and sellers, right? Their buyers and sellers, they meet among themselves. They decide that, okay, what is going to be the price of a product through the continuous sale and purchase. Continuous sale and purchase के साथ में they decide that, okay, what is going to be the pricing for it. So exchange traded derivatives, I also told you yesterday that the regulations on the exchange traded derivatives is quite strict. ठीक है, whereas in the over the counter, this is quite a private kind of trading. Here, two parties will enter into a contract, right? They do not have a middleman in form of the exchange traded derivatives. Just for the sake of example, I'm explaining you. So it is a kind of private. Sometimes you might have heard, see, I'll tell you an example. For example, I wanted to buy a dress and I went to the store. There are so many dresses available there and I just picked anyone out of them. This is called as exchange trading. Exchange trading means when you went to a marketplace, there were so many options available. You just picked something for yourself and just it was done. But over the counter is I did not like any of the dresses and I want to have a custom made dress for me. So I went to a tailor. Now this contract is between tailor and me, right? This is a kind of private contract. I am telling about the design of the dress. I am telling about the fit of the dress and everything, right? So this is a kind of custom tailoring that I am taking. This is called as the over the counter where your contract is custom made for you. ठीक है, the number of regulations are also less in case of over the counter derivatives. Exchange traded derivatives are more strictly regulated. ठीक है, चलिए आगे देखते हैं. So exchange traded derivatives, they are the contracts which trade on an organized exchange. Contracts can be bought and sold at any time during the time then when exchange is open. So this provides the liquidity. ये क्या provide करता है? Liquidity. The contracts have standardized terms set by the exchange or the clearing house. Prices are publicly available. ठीक है, prices publicly available होती हैं. Next is the over the counter derivatives. Over the counter derivatives, they result from the agreements between two parties. So this is a more of a kind of a private contract, right? The parties can negotiate the contract terms that are mutually acceptable. The contracts can be terminated only with the agreement of other party and the prices are not publicly available. Why will not be available publicly? Because they do not know the correct valuation. In the exchange traded contracts, you exactly know that what is the valuation, right? Because of the frequent and buying and selling that happens, you get to know the pricing. But in case of over the counter, you do not get to know the pricing. ठीक. Next, I hope you have understood this. One more thing that I needed to tell you over here is, yes, so here the contracts can be terminated only with the agreement of the other party, right? And in the exchange traded derivatives, see, either you have to fulfill your obligations or what you can do is you can sell your position. ठीक है, आप किसी और को बेच दो. Anyone else who's interested in buying your position, they can just buy, right? If you want to sell, you can sell. So that is one of the advantages of the exchange traded derivatives. Next is the standardized derivatives and exotic derivatives. ठीक है, अब नाम से ऐसा लग रहा होगा कि oh, these are so typical and like variants, but it is actually not. Standardized derivatives like your futures and options. ठीक है, and exotic derivatives means forwards. Now why it is, I'll tell you. See, what happens is, I told you, futures and options, they are exchange traded. ठीक है, forwards is not the exchange traded. That means what? Futures and options, just we saw, they are exchange traded. Means anyone who is interested, they can come and they can buy. Forwards, they are OTC, over the counter traded. That means they are specially made for client, right? They are specially made for the customers. Because they are specially made, that is why they are over the counter traded. And because anyone can come and take the futures and options, that is why they are exchange traded. So we just giving an another term for these particular products. Standardized derivatives का मतलब these are specified by the exchanges and they have simple standard features. Simple features होते हैं like simple expiry, strike price etc. There is nothing more complex about it. ठीक है, बहुत ज़्यादा कुछ complex नहीं होता. That is why they are also called as the vanilla derivatives or